Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, what's more important when you're looking for being a multifamily investor? Is it finding the deal? I should say, what's more difficult? That's what I meant to say. What's more difficult? Finding the deal, finding the money, or executing the business plan? And maybe what's more important as well? That's a really tough question. Obviously, you have to have all three to be successful, right? But, which one is the biggest focus that you need to have? Which one's the hardest to get? And there's really no good answer because, again, you have to have all three, right? You have to have a deal. You have to have the money. And you absolutely have to execute on the business plan. I think the most difficult one probably would be to execute on the business plan because it takes the most time, right? That takes the most energy, that takes the most effort. So that's probably the most difficult one. Now, it's maybe not the most important one, I don't know, hard to say. But finding the property obviously is, in my opinion, probably the most important because if you don't have a property, you don't need the money and you don't need to worry about executing a business plan. So you got to get the property first. In today's market, finding the property is extremely difficult, right? We just don't have a ton of properties out there that the numbers make a lot of sense. And depends on who you are as a buyer, what your business plan is. Everybody's got a different business plan. But if you're a multifamily syndicator like me, our big concern is our investors, right? We want to make sure we can make our investors returns. We want to be able to provide them. In my case, I want to be able to provide 8% or greater cash on cash return on average. We want to try to provide 15% IRR on average to our investors. We want to give them a solid investment, a solid return on their money. And so in order to do that, it's really tough to find a deal. It's really tough to find something that actually pencils and makes that. So we've got to knock on a lot of doors, right? We've got to build relationships, valuable relationships with brokers. We've got to be consistent on underwriting. We've got to be consistent on sending in letter of intents. We go a long period of time sometimes before deals. Hopefully it's only a couple months, but sometimes it's a year or maybe even more between actually closing on deals. I will write, hundreds of letter of intents in order to get just one deal. I will look at, I don't know how many, countless deals. I don't really keep track of how many deals we look at, but we look at deal after deal after deal and underwrite those. We've got other people that help me underwrite, and we look at a lot of deals. So that's really important. But we don't want to lose sight on the importance of having the money lined up too. A lot of people will get the deal and then worry about the money. A lot of people think they can get the money. They think, I know a lot of wealthy people, I'm in that field or whatever. I just know people that have money. And so they think it's going to be easy. But if they haven't been cultivating those relationships in the proper way, that's actually going to be really difficult. It's more difficult than what a lot of people think. And so you've got to prep your investors, right? You've got to cultivate those relationships. You might already have relationships with these people, but they think of you as whatever you are. You're the doctor, the tech guy, whatever you are. That's what they think of you as. They don't think of you as a multifamily real estate investor, right? They don't think of you as somebody who's doing syndication unless you've been talking about it, unless you've been, getting them excited about it, unless you've sat down and had conversations with them about it. They're not going to know and understand that's what you're doing. And then, of course, the execution. Like I said, that's the most timely or time consuming. That execution is difficult at times, right? Sometimes properties go really smoothly. The economy just goes great. Anybody who's bought a property over the last 5 years honestly, you've had a pretty good run, right? Things have been really smooth. Rents have gone up. Occupancy has gone up. For the most part, it's been smooth sailing. And there's still difficulties that come along the way. There's still hiccups. I'm not saying it's easy, but it's been easier. But now we've got some issues, right? Now we've got this COVID pandemic. Now we've got riots happening. We've got election. We've got uncertainty. And so now is when that execution becomes critical and becomes difficult. And so this is where where we're going to see who the operators are that are going to be successful, those who are not, who aren't willing to put in that time, the energy, or maybe just don't have the systems down, just relied on a great market. So execution is very critical, as well as the other two. Obviously, if we don't find a deal, we haven't started, right? So step one is find a deal, but step two, if you don't have the money, you can't close. And step three, you have to execute. Because what's the sense of getting a deal, getting your investors, and then failing on the investment? Obviously, your investors aren't going to come back for more, and you're probably not going to be able to get any more deals because you've already screwed up. People don't trust you. It's just tough to continue the business, obviously, if you can't execute. So all three are important. I'm going to talk about the differences between all three and maybe do some debating with anybody who thinks one is more important than the other. So if you are a very firm believer that one is more important than the other, or one is more difficult than the other, just let me know. And hey, maybe you can come and debate me.